Morning, everyone. So I'm co-founder of Merkle Tree Capital. It's a digital asset fund we've been running for 3.5 years now. And what I want to talk to you today about is money and the technological advancement that we're going through at the moment. Money is the foundation of every economy, yet it's pretty poorly understood. We think about money as something that, we get paid in, we pay our taxes in, and we transact in it, and that's about it. And don't really go into any detail about what it was, what it used to be, and what it can be. Throughout history, there's been a lot of technological advancements in money. Recently, we've seen things like plastic money, credit cards, and debit cards that have allowed online transactions to grow an economy and enhance commerce. And more historically, there's been bigger ones like notes, the invention of notes, and also coinage, which is a unit of account that was standardized. So that, again, had huge implications for the amount of commerce that can be done with the money itself. And we believe we're going through another one of these large technological advancements at the moment, a real profound shift. And that's probably a good way to think about Bitcoin. A lot of people don't understand Bitcoin. They also don't have a great understanding of money. So you really need to have a look at the history of money and understand this is a technological advancement. What it does allow, Bitcoin and stablecoins, is instant transfer, self-custody of your assets. You no longer have to have a counterparty risk, and instant settlement. So these are all much faster, easier ways of transacting, and it's available to everybody on the planet as well. Traditionally, or in living memory, we've relied on government-issued currencies, and that's going to change, we think, a little bit pretty soon. Developing countries, you see, have really abused their currencies a little bit, and they've lost a lot of value when they misallocate that resource, and the participants within that economy lose 99% of their value. So with the advent of stablecoins, we think that is going to change. This is changing the way we should think about money. So what is Bitcoin? Money can be more than just a medium of exchange. It can also be a store of value as well. So Bitcoin is the first non-government issued currency since gold, effectively, which is a pretty big idea. That's 5,000 years plus history of gold. Here's the first time we've got something that we can rely on that isn't really government issued. So technology is the way to really think about it. This is the first permissionless, borderless payment network in the world. Anybody can use it for free, as long as you've got a smartphone, which billions of people across the planet do now. You can be part of this network. It's now in direct competition with 160 odd fiat currencies around the world. They've had a monopoly on those economies for as long as we can remember, and now they're going to face some competition. There's only a handful of assets that attract monetary premium. The dollar, or any sort of dollar, is one of them. Gold is another one. There's a little bit is used for jewelry and for commercial applications, but about 90% of it is monetary premium. So if it didn't have money likeness, then it wouldn't be worth $3,000 or so, what it's worth now. And then you've got Bitcoin as well. So, comparing the qualities of each of these assets, we think clearly the supply of Bitcoin is absolutely fixed. Gold is semi-fixed. We don't really know exactly how much there is, how much can be mined. As it gets more expensive, we mine more. In 100 years, will we be mining it on the moon? Probably, potentially. And the dollar, we know they are printed more and more regularly in unlimited supply. So that impacts the store of value, and we think that's one of the strongest points of Bitcoin. And the other thing I think to really notice is the cost to move and storage cost, where the US dollar improved on gold, and it's pretty much how it overtook gold as the standard unit of account. That whilst its store of value wasn't as good, you could transact a lot faster. And I think Bitcoin combines the best of gold, store of quality, store of value, with US dollars movement of speed. So in fact, it's improved on both of those from each side. So it's better store of value and it's even faster to move. There's a lot going on this chart, but what you can see is inflation doesn't impact a country, it impacts a dollar or the currency. On the left-hand side, you can see these are currencies we know we don't want to hold on to. They're losing value really quickly. And what we think was going to happen with stablecoins particularly, so this is the amount of value they've lost against the US dollar. The US dollar, meanwhile, has lost 99% of its value against the dollar. This is over the last 10 years. With the advent of stablecoins, everybody on this list, every individual in all these countries, as long as they've got a smartphone, which 6-7 billion of them do, they can now store their value in US dollars. So they get paid in Argentinian pesos and they can move them straight into US dollars. Don't have to go onto the black market to pay a lot of money to get those actual dollars, physical dollars. They can do it on their smartphone. So we think that's going to speed up this trend where more and more of these currencies lose value. The US dollar will increase its demand. It's already the global reserve currency, so it's got more demand than any other currency. We think this opens up more demand from all of these other countries, participants in these different economies, to be able to store more of their value in US dollars. That brings them onto crypto rails. They can store that on their phone. We think that'll inevitably lead them towards Bitcoin as a better store of value. The implications of that are obviously pretty big. There's probably 140 of these currencies will come under serious pressure because they won't be able to force their population to use them, or it'll get increasingly difficult to do that. So as long as you've got an internet connection, you'll be able to go and dump whatever that local issued currency is and get US dollars and or Bitcoin. So is that happening? You can see here year-on-year growth for crypto is the highest in Sub-Saharan Africa, Latin America, and Eastern Europe. So these are places we typically know that face larger amounts of inflation and hyperinflation events. So 40%, over 40%, that's exponential growth occurring in those economies. Stablecoin data, so this is updated since a week ago, but it's now $2.5 trillion of transaction volume happening on stablecoins. Over 500 million transactions happening. This is in the last 30 days, these numbers, and supply up to 164 billion. You can see the last peak was during the last bull market for crypto. We think we're just at the start of a new one, so expect that to go up much, much further. And clearly a lot of activity happening in stablecoins. Tether is the preferred one for a lot of these emerging markets on Tron. And you can participate in the upside on that by owning the blockchains in which these activity and these transactions are happening on. So when you do a transaction online, on chain, a small amount of revenue goes to that blockchain, and that creates more demand for the blockchain. So if you hold that blockchain, be it Ethereum or Solana or Tron, that's value being accrued to yourself. So here's a little bit about our fund. Last year we did 128% return. This year we're just ticked over to about 110 for year to date. It says 56 there, but obviously the last 3 weeks have been really, really solid performance. What we like to pitch our fund as being the most conservative way to enter this space. So we hold a lot of Bitcoin and a lot of things that will benefit over the transactions that we see happening on chain. And yeah, that's about it. Please come and have a chat anytime. You can reach out to me online for a chat as well if you want to have a conversation another time. But thank you. And I think, just think of this as a technological advancement. And there's going to be serious implications for these less demanded currencies all around the world. And that's going to hurt their bond markets as well. I'm not really sure exactly how that plays out, but certainly the US dollar and Bitcoin together are both going to become more and more dominant in our view. Thank you.